Hello, and a massive hello to everybody. How's everybody doing? Hope everybody's having a great weekend wherever you may be, whatever you may be doing. This is 50 Pips, rocking and rolling 6th of November 2016. So, as we get closer and closer to the election, entering election week, what to look for, what to look for, what to look for. As usual, no trade calls and recommendations. Everybody's responsible for their own stuff. We're doing this for educational purposes only. Now, before we start looking at this week, which is clearly all about the U.S. presidential election, right? Even though we do have an RBNZ rate statement, it's really all about the U.S. election. A healthy reminder, a boring reminder from 50. As usual, no trade should be big enough to change your life for the good or for the bad, right? If any trade has the possibility of doing that, most likely you're trading too big. The focus is not really to try and, make an awesome trade or make a lot of money, because remember, risk goes both ways. So you want to focus your trading career on what we always talk about, which is consistency and longevity. So for us, the priority is to be here another day. So, okay, we have a U.S. election, which is a great opportunity if you wish to trade. There might be great opportunities out there depending on what happens, but you don't want to put yourself in a position to, end it there and then. So try and be responsible with your trading. And remember that if you don't feel comfortable trading, if you're not sure what you're doing, etc., you don't have to trade, right? Nobody's got a gun to your head telling you have to trade throughout the election. Nobody's telling you have to have positions on, right? You can easily just wait, see how the market settles, and then take advantage of any opportunities that may arise. Broadly speaking, the way we would look at things, or I think most people are looking things, are Clinton win, risk on, Trump win, risk off. The way we look at things, we don't care whatever happens in terms of trading. We're just looking at levels. So we're going to try and keep this as unbiased as possible. We're just going to look at support or resistance. And as usual, our favorite way of looking at things will fade strength or will fade weakness. We really don't care if we get long or short. We just care about areas to do business, right? So bonds, most interesting thing for us. Now the technicals are still looking here of, we're talking about this big top, possible generational top, and the move down in play. So as far as we're concerned here, as long as any market bounce, right? As long as any market bounce that doesn't take out the 166, 167, we still expect the path of least resistance to be to the downside, back towards this more neutral zone, which is 158, 156. Now, clearly, should you get risk off, Trump winning, etc., and the bonds catching a bid, right? This would be a very interesting zone for us to look at possible fading the move if it starts to base. And if you're riding shorts or you're looking to get long on a possible Clinton win, any aggressive move down into this area for us is a fairly interesting zone to look to cover shorts or look at tactical longs. But again, kind of a bit in the middle of nowhere, very important overhead support and extremely important overhead resistance and extremely strong support to the downside. The levels haven't changed. Our outlook is pretty much the same for the ZBs, right? Now, in terms of equities, quite pure, right? The moves are quite nice. We've been looking at these topping patterns and we've been talking about healthy corrections here. NASDAQ, this is a weekly, just to give you an idea of the bigger picture, right? We have this beautiful failure here. We come out and we start to take out all these highs. So, what the chart is telling us, that path of least resistance, especially as long as we hold below this area, right? These previous highs, is for the market to try and come back down here, and we should find an awful lot of support into this 50, 100 weekly moving averages, as the market, as clearly the dips got bought, and this is going to be a real key bull bear line post the election. Again, we would think that any aggressive bounce or aggressive weakness will probably present some kind of opportunity. Now, if we're to look at that on a daily time frame, this is the map we were using to guide us, right? So here you would expect any bounce into this area to be extremely important resistance. So if the move is going to get faded, you'd expect the faders to come in here. If this level gives way quick, then do not be surprised if we rally all the way back up into the 48.20s, 48.30s. Equally, as we close very heavy, would not be surprised for the market to continue to try and take some stops out to the downside pre the election. But keep in mind that on sell-offs, you've got an awful lot of support coming up. But the way these are closing, these have been trading very, very heavy, and it just looks like you're taking more and more risk taken off the table. So we would not be surprised these lows to try and get taken out even pre-election, right? Now, keep in mind that the results will be out very, very late on Tuesday and very, very early on Wednesday for the European crowd. So again, it's not a complete binary event because we'll have results coming out slowly. So it depends how things turn. We might have a steer for how things are going much earlier or much later. That's still a big question mark. Looking at the ES also, right? We have this topping pattern here. Take those out, and that's where we got the real important support coming in. This needs to hold. If this doesn't hold, then it could get very ugly. Again, we expect those lows to get tagged. And again, we'd expect any rally to find sellers because globally speaking, this is still heavy. So we still think the move to the downside is on and is in play. If you look on the daily, you've seen this has been very, very tactical here, technical, and this is hovering right at the 200 DMA. Now, we would not be surprised to see market continue to try and take risk off pre the election. So if this goes, we would not be surprised to see this move into those 2050s before the results are out. And the way, assuming we're trading around 2050s, then we think that the risk to the downside on a negative market reaction is far greater than the risk to the upside, because we would expect trading at 2050s, the risk to the upside to be into these pretty much these 21s, right? And you should get a lot of selling pressure coming in that whole area. So we'd expect that to be the risk to the upside. But to the downside, if we're already holding heavy and things look very ugly, then we would expect the market to want to take a stab right down through into the 1970s or possibly 1950s. So we still think that the risk is skewed to the downside, right? Gold, nice little move. We've been talking about this for a long time. As far as we're concerned, the failure to close below 1250, we're looking for market to move back into the 1300. So as far as we're concerned, that trade is done. And right here, we're just chopping. Market's just waiting, right, for this election. Remember, the range is still 1350, 1300, 1250. So this is extremely neutral, extremely neutral. To the upside, expect sellers to come in there, but 1350 to cap. To the downside, expect buyers to try and support that 1250. Overall, not very glamorous because still stuck inside this range. So we still think that, especially if you're looking for trade opportunities, et cetera, we still much prefer the equities or the currencies than gold. Looking at crude, we said, 47's pivotal on that break lower. We said there's nothing much until the 47s, and if it's going to bounce, it's going to have to bounce there. If not, 44, 42s come into play very quickly, right, through this bull bear line. So we got very aggressive signals. So this is extremely important, right? We're into very, very extremely important support. Now, we would call this 44 to 42, right? This is the key support. So if we're going to bounce, we should bounce off that level, and bar any, wheeling and dealing circus acts on the wires, you'd expect sellers to try and cap it at the 47. Now, if this gets ugly, 38.80. So the way we're calling it here, we're looking at it is fairly neutral here, 47s to the upside and 38s to the downside on the election. We'll have to see how this trades. Personally, not very interested in trading this. Far too much event risk, far too much comments on the wires leading into the 30th, the OPEC meeting. There have been so many other opportunities than really trying to be aggressive here, unless you were riding shorts off those highs. But I think most people had covered them well ahead of the sell-off, and it was more aggressive short-term players there. Looking into Forex, what's going on in Forex? So quickly, Aussie. We talked about these highs here. It's pretty much going to be, is the dollar going to catch a bid or not? If the dollar gets sold hard, we still expect sellers to try and cap this. And if the dollar gets bought hard, we expect us to try and come back down to those lows. So even here, we think that the risk reward is still stacked, even post-election, for dollar strength, not weakness, as this is the risk to the upside and this is the risk to the downside. Okay, but we've discussed this chart a lot in the past. And again, remember, we got that RBNZ. So what's happening here on Kiwi? So we had this beautiful little sell at the 50 back here that tried to get going for new lows, which clearly didn't work here. So it looks like this is really bid. It's back above mid-channel, and it looks like it wants to try and take another stab at those highs, right? Problem is we've got the election, RBNZ now. Most people are expecting RBNZ to cut. I think if they cut and they don't give any guidance of more cuts, you're probably going to see this sell off a little and bids coming in, trying to support and try to wrap and rip it back higher, right? Just talking about RBNZ, not talking about election. And if they don't cut, then you should expect this to try and take a stab there quickly. Now, election, again, we think the risk to the upside on dollar weakness into those recent highs, risk to the downside all the way back down to the bottom of the channel. So still we think, dollar longs is more interesting than shorts the way we're trading here. We'll have to see how we trade into the election. Yen, again, little panic, risk off. You'd expect price to potentially come very quickly all the way back into these 101s, 100s. And as long as this holds, this is still going to be very formidable support, and we would still expect this to hold. Even if we peak below the 100, we'd still expect it to hold. The only way this gets extremely bearish for us is if we get a daily close below the 100, then it gets ugly. On risk, on risk on, then we would expect this to try and take a stab quickly at 105.50s and possibly all the way into the 107.50s. But again, not an awful lot, but we'd still expect the dips to get bought here. And last but not least, what's going on Euro? As we said, if anything, you have to look at longs here. You have a nice little daily reversal for a move back into the 1050. We suspected this area to these two moving averages and the 112 would be attracting, as this pretty much has been the pivotal zone for ages, right? We've been stuck around this 112, so it's only fitting we're going into the election close to this 112 in very neutral territory. So here, the way you have to look at it, I think there's very little to say. It's fairly obvious, right? On dollar getting bought aggressively, you'd have to look at those 108s, 109, 108s coming into play again, and sold aggressively, you'd have to look potentially all the way back into the 115s in play, right? We still suspect that bar something catastrophic happening, et cetera, even though we move upside, downside, we'd probably end up coming back to somewhere neutral around the 112s. We'll have to see what happens, but we, as long as we're inside this broader range, we don't think there's an awful lot of edge here, and we still expect the extremes to get faded. Now, again, just not to labor the point, there's so much going on. There's so much the market's going to have to digest in the overnight session, especially, as we go into Asia ahead of London Open, etc. on very, very late on Tuesday. So that's going to be like 10 p.m., 11 p.m., 12 p.m. New York, very thinner liquidity. You don't want to get off guard. You'll have possible slippage. You'll having the bid ask widen. There's not an awful lot of edge. Most likely you want to prefer to wait until London Open. And again, a lot of things can happen. There's a lot the market has to digest, regardless of whether Clinton or Trump wins. There could be a lot of wheeling and dealing, people not accepting, people calling, how close it is. there's so much going on. Just keep an open mind, stay extremely small if you're trading, stay nimble, don't get stubborn, and for those of you trading, may pips be your way. For those that are watching and waiting for something interesting to shape up, I hope something really interesting shapes up. We'll be around as usual. If there's any chart anybody wants to talk or anything anybody wants to post on the blog, please let me know. Thank you so much for all the likes, the shares, and the positive comments. It's always very welcome. And should something extremely interesting happen, we'll maybe try and do something midweek. I'll try and post the video midweek. If not, have an awesome one. Thank you so much for listening, and talk to you guys soon. Take care, guys. Bye-bye.